This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to discuss the market trade as we wrap up the first week of August, we welcome in Naomi Blohm, Senior Market Advisor with Total Farm Marketing, joining us today. Naomi, appreciate the time. Thanks for joining us on Market Talk. How are you?
Oh, doing great. And thanks for having me. I'm excited to be here.
Well, I know first time we've been able to connect, so I'm glad we found some time for you to be on the show here today. And, it's been a wild week in the markets again. The volatility is still there. We have a lot to probably discuss, I think, here today. But, overall, looking at Friday's session to wrap up the week, to me, markets just felt kind of tired. I know there was a lot of news items out there, but it felt like kind of a meh, ho-hum sort of day. Is that the general feeling you got on Friday's trade, or was there something else you were thinking after just looking at the closes?
Yeah, a little bit of profit taking to start the morning, especially with weather forecasts still showing chances of rain for next week. Overall, though, looking into next week, when we've got that USDA report Friday, grain markets might be stuck in a little bit of a short-term sideways consolidation pattern. Right now, we don't have any reasons to just break out higher or even retest some of the recent highs that we had, nor do we have a reason to fall apart lower for the short term here. So I think kind of stuck is what we have, and the markets reflected that today with some quiet two-sided trade action.
Yeah, I noticed as well, looking at corn had a pretty good day today. It felt like a little spread trading between corn and soybeans on Friday. We think about the weather issues, and some folks out there think the corn crop's made. I think that could be debated. We still have grain fill, et cetera. But you look at this corn market, to me, you mentioned a sideways range. It's kind of felt like it's been holding around this $6 level for a little while now. What are your thoughts in this corn market?
Yeah, definitely some sideways trading patterns. $6 support area seems to hold, $6.25 as resistance. Overall, we're still not able to get back above that long-term uptrend. We're still below it just a little bit. And the market's trying to understand exactly where the yield is at. As you said, we're dealing with Western Corn Belt yields, which are going to be below average. Central part of the grain belt is going to probably be okay. And now we've got bad things happening with too much rain in other places too. So it's a very big question as far as where the yield is going to end up. I would say it's definitely not necessarily a record crop out there, but it's not a disaster. So with next week's USDA report, what I'm really curious to see is where they put the acreage for corn, because remember on this August report, they don't usually touch acres on this August report, but of course on that June 30th planted acres report summary, they said we're going to resurvey farmers in North Dakota, South Dakota, and Minnesota. So we're going to see those numbers on Friday, and that is going to be something to be watching. Yield, acres. We're going to have to keep an eye on global production, probably a decrease for the European crop and an increase for the Brazil corn crop. And, ultimately, when all is said and done, it's going to end up only mattering where they have the ending stocks for the U.S. and the world. If the ending stocks are getting smaller, then we have every reason in the world for prices to stay firm and supported for now. But if by chance they make those ending stocks a little bit bigger, then we might see a little bit more pressure for prices until we find our harvest low.
Well, you mentioned the resurvey in the Dakotas and Minnesota, and staying on that trend a little bit, on this past Monday's crop progress report, we saw a big jump in North Dakota corn condition. I posed this question earlier this week. I said, I wonder if that's maybe a smaller set of numbers there because we lost some corn acreage in North Dakota. I know you talk to farmers across the country. I mean, we look and wonder about that resurvey. Have you heard anything? Was there a big shift in acres across the Dakotas and Minnesota that we really need to watch out for?
Well, it's a big question mark for me because, as I was talking to farmers in the spring, they were saying, well, I'm really thinking about doing prevent plant acres. And then it seemed like maybe they were pushing it in at the last minute. And some said, no, for sure, I did take the prevent plant. So I got to be honest, I don't have a clue where these numbers are going to end up next week. So your guess is as good as mine. And as far as the condition of the crop, as far as what is there and what's growing, of course, we know it's behind because it got planted late. But I'm not hearing my guys complain about the crop. So when they're not being vocal, that usually means things are okay.
Well, looking at soybeans, let's shift our discussion there a little bit. Friday's trade, a little spreading, it felt like, even in beans itself between old and new crop. China stepping in, buying soybeans. That rumor hit the trade Thursday, and then, we got it confirmed on Friday. China and unknown, although we presume that was China. I think a little surprising considering the way tensions are between the U.S. and China right now over Taiwan. What are your thoughts on those sales and just how the bean market performed on Friday?
Yeah, I would agree with you. I think we were maybe anticipating that China would potentially back away because of the strife with Taiwan. So it was encouraging that they did come in and buy. So it gives us a little bit of hope that the exports to China will remain as strong as they've been. You have to also remember that we're getting into that time of year where China does come back to our marketplace because we're getting closer to harvest. So they want to gobble up as many supplies as they can, while prices are usually getting to be at the lower end of trading ranges heading into the harvest low. So I was definitely encouraged by it. I thought it was a good thing and was supportive for prices, and is what's able to keep that November soybean price definitely over $14 as we finish the week.
Now, the meal market, that has been a really strong point here. Friday, obviously down. Was that a case of just some profit taking, do you think, heading to the weekend?
Yeah, definitely profit taking into the weekend. But you're right. The soybean meal was something that, I'll be honest, it flew under my radar. I wasn't really keeping an eye on it. I was more focused on soybeans. And then earlier this week, when Poland came in and bought soybean meal, I was like, what? What's going on with this marketplace? But of course, they had been, I'm sure, probably getting most of their needs from Ukraine, someone logistically close to them. And when, the Ukraine strife is still there, it makes sense that they're turning some of their attention to the United States. But it had definitely been, I think it was somewhere between 5 and 10 years, the last time that they had bought from the United States for soybean meal. So it was a nice purchase. And then it got me thinking more, well, that herd in China, their hog herd is almost back to normal levels. So they're going to be needing feed, and just the demand for soybean meal will be there. And of course, we're going to hopefully have good news for soybean meal and soybean oil as far as our bio products that we have. So we will have some soybean meal to sell to the world. And it's nice to see that price has been inching higher.
And bean oil as well. Friday's trade, a little bit of a recovery in crude oil, and I think maybe even some unwinding of the meal oil spread possibly there with bean oil moving higher on Friday.
Yeah, I think that's exactly what's happened there, because it does seem like when you're trading soybean meal, you're always kind of talking about soybean oil as well. So I think they are connected that way. And then you're right with the crude oil market. That's one that's been inching lower, and crude oil prices tested the 200-day moving average yesterday and today. And it does feel like maybe crude oil prices are going to find some short-term support here. But overall, that's a trend that's really started to work lower, as the ideas, of course, are that supplies from OPEC are going to be slowly building, and maybe the fear that with recession talk here in the U.S. and around the world, that maybe demand starts to falter a little bit. So that's a market to keep an eye on going forward too.
Now, just in general, we look at corn and soybeans here real quick. Thinking about where the levels are at right now, especially new crop. I mean, little over 6 in December corn, a little over 14 in November beans. It feels like a good spot to protect some downside risk here, especially with a report coming up on this next Friday.
Yeah, I agree with you. And my bias for commodities has shifted to more defensive. I've been really bullish the last couple of years, but ever since I saw the Goldman Sachs commodity index start to show some bigger topping signals, and with recession talk and inflation talk, I'm definitely more cautious. It just feels like commodities maybe are getting a little bit tired. And if the United States on the report next week ends up showing that our supplies are a little bit larger, or if global supplies are a little bit larger or ending stocks are growing, that's going to just continue to weigh on the market and prices. Seasonally, usually the month of August is when soybean prices and corn prices push lower. And we don't usually find our harvest low until early to mid-September. So I'm with you. I think being defensive heading into that report is probably the right strategy.
And as well, looking at the cash side of things, basis, I mean, has held up fairly well, it feels like, in many areas. I know we're getting a little bit of a difference between the Eastern Belt and the Western Belt, which is typical. You look at cash basis, though, for quarter beans, any thoughts there with that market, whether we're talking old crop still or into the new crop?
You're right. Basis for the most part has been firm. In some places it's strong. Cash markets always usually tell the truth as far as what's going on out in the countryside. So going into the next few weeks as the bins are getting swept out, I'm very curious to see what basis does, most likely like late August into September, because last year it stayed strong, it got stronger, and then even at harvest time, basis was staying strong. So that was our cue to know that the end users were really depleted of supplies and the farmers didn't have it. So that is what I'm really wanting to watch over the next few weeks to know, is the grain really out there or not? Or are supplies actually in the countryside smaller than what we were being told? So cash market always tells the truth, and the basis staying strong is something that we need to watch because it could be maybe more of a truthful indicator that our supplies are tighter than we think. And then again, we'll see what the USDA says next week, Friday, and then we'll have to compare the two in the following weeks.
Let's talk the wheat market, Naomi. Fairly quiet day. It felt like on Friday. I would have to think that surging U.S. dollar was just a big headwind there for all three wheat classes. What are your thoughts, though, with where this wheat market's at right now? We've obviously taken a lot out of it here in recent weeks with everything going on, the different moves in the market. So you look at wheat as a whole right now. What are your thoughts there?
Well, I think it's cheap. I think it's almost undervalued. Now you can talk about the wheat and corn ratio, and now wheat is cheap enough that you could potentially suggest you could use it as a substitute for feed. So I'm wondering, and I'm hoping if we see U.S. wheat exports pick up in the coming weeks. But of course, that market is kind of tempered right now with thoughts that whatever grain is in Ukraine is slowly getting shipped out. So wheat prices might just be stuck in that sideways consolidation pattern until we could just have a little bit more time to know what the quality is of that grain that's coming out of Ukraine. I mean, if it's nasty and rotten and nobody's really actually going to want it, well, then you got a different story to be talking about. But we're not going to know that for a couple more weeks yet. And we'll see what the USDA says for Ukraine and Russia on the report next week, and also European supplies. So wheat will be taking its cues from the USDA report from the global standpoint.
Yeah, and you mentioned Europe as well. We've had issues there. We've had issues with Argentina's wheat crop. Spring wheat in the U.S. looks pretty good right now, but then winter wheat planting is going to start up here in a few weeks, and there's a lot of producers who are worried about it being very dry in the southern plains right now. So I definitely think there's some issues ahead still for this wheat market, as you alluded to, Naomi.
Yeah, and I'm glad you brought that up about the winter wheat and planting starting, because you hit the nail on the head. When you look at that drought monitor index, it is parched soil conditions. And if I was a producer down there, I don't know that I would have the courage to even plant it. So, thank you for bringing that up. Now I have something else to watch.
Well, sometimes I do my homework, but let's segue out of the wheat market here. Just talk the macro side of the picture as well. I mentioned the dollar moving higher. We got a jobs report out Friday that was much higher than expected, and obviously have the inflation worries, the recession talk. When you look at the whole macro picture, I'd love just your perspective on how that's weighing into our ag commodities, livestock, et cetera, right now.
I think it's the kind of the sleeping thing right now that the market is ignoring from the standpoint of, inflation is still high, interest rates are going to go up. And with the jobs report today, at first glance, it was encouraging news, but then trade spun it and they said, no, that just means that the inflation isn't working and that the interest rates are going to have to go higher yet for the next Fed meeting. And so the stock market then worked lower because of that spin that the traders were taking with it. So, the last time that we had this kind of a situation, I'm just thinking back to like the big crashes of 2008. I'm thinking back to the recession of 2008, and where I live in Wisconsin it's a really cool town. The town is called Fond du Lac, and it's a mix of blue collar and white collar and farming community. And so we have Mercury Marine boat engines here. And so when we start to see, the boating industry falter, and we're starting to see the camper industry falter for those who live in Indiana, they know that. That's where I'm starting to get nervous. And so my town, when I'm still driving around, the restaurant parking lots are still full, but I'm starting to see my peer group, and I hang with a variety of folks, they're scaling back. And so I'm thinking that it's coming. And my fear is if we start to see these companies lay off workers, because right now people can hang with it. They're dealing with the higher prices. They're making cutbacks in other places. But if people start to lose the jobs, I think you're going to just see the dominoes fall. And that is what I'm freaked out about. For lack of better expression, I'm very nervous about that, because that would be something that I think would start to hit the market more like in 2023. And then we see the wheels fall off the bus. And so that's just my perspective. When I'm in the grocery store, I'm super nosy. I'm looking in people's shopping carts to see what they're buying, and people are definitely scaling back. They're doing different kinds of substitutes for what they're purchasing. So I'm noticing things from a female perspective, and I think that the worst is yet to come.
Well, that is a great segue into the livestock sector for us, Naomi. Before we run out of time, I want to talk about that. You hit the nail on the head. I think I'm seeing some of the same things too in the grocery store. I mean, consumer demand, we talk about it, a lot more ground beef, a lot more pork, a lot less steaks, a lot less chicken, etc. We look at the cattle and the hog markets, the protein complex as a whole. Obviously, with all the recession fears, demand taking a bit of a hit, that's something that's going to be a significant weight, I feel like, you're moving forward in the protein sector.
Yeah, and when you think back a few years, the last time that we had real high cattle prices going into 2014-15, we saw demand falter a little bit because of the price being high at the store, but we weren't in a recession at that time. We had come out of the recession. So now if we have a combination of high cattle prices because we're going to be seeing, smaller herd numbers, I'm very curious how that would time out with a recession if it were to happen in 2023. And then you see people really pull back. So that's something that might be new to the market. If we have the recession actually happen, we probably do see the pullback on beef demand here in our country. And that maybe helps to offset the fact that we will have smaller production going into 2023. So that's going to be a delicate tightrope to balance in the coming months.
And that's a great point you made, because I've talked to a lot of folks who said, I'm bullish the cattle market into the fourth quarter. I'm bullish. This herd's going to shrink. But if that scenario plays out, you mentioned, one has to wonder just how bullish this cattle market really could get at already elevated prices.
Yep, absolutely. So, hopefully we see some good holiday demand. And then after the new year, we'll see what happens after that.
Definitely. Hog market as well. That August contract, I've talked about this quite a bit. It's just been on a tear. It's like a freight train running out of control. Pretty much in line with the cash index with about a week to go. Any thoughts in this hog market as a whole? Is there anything different here than the cattle market right now?
Well, I think, you probably covered the story quite well with what's happening with hogs. And, the thing that I think of is that our American producers did a really good job of recognizing that over the past couple of years, the Chinese had been, saying they're not going to be needing to import as much hogs. So our producers scaled back on production, and we met that head on. And so we had a really nice mix of, scaling back production, so that way they wouldn't see a big washout on prices. But I got to tell you, I'm befuddled by that whole August contract and how much it has just taken off like a rocket. So that's actually, been really surprising to me. And I'm trying to, keep an eye on the hogs for those deferred contracts. And like you said, I think we're going to actually end up seeing some more demand come in for pork, because at the store, it still is a little bit cheaper. And we're getting also into the time of year where the weather's going to get a little bit cooler. So you've got the tail end of the grilling season, which is great for pork. And then you're also going into the time when people are going to be back at school. You're going to be putting pork in the crock pot. And then you have a nice meal at the end of the night. So I think you're going to see a double factor for demand for pork.
Well, fantastic stuff, Naomi. Before we wrap it up, I'll open it up to you. Floor is yours. Any final thoughts you have for us today?
I'm really cautious of that USDA report next week. There's going to be so many factors on it to be monitoring, and I don't know which aspect trade is going to bite onto the most. It could be something where the USDA does a very clever supply and demand category where they make maybe, corn friendly and beans bearish, and then we just don't know what to do. So the market is going to have some initial knee-jerk reactions. And then, of course, we're going to be finishing out the day heading into a weekend. So just be ready for anything next Friday. But I think my bias is still to protect for downside. That's where the bigger risk is right now.
Well, Naomi, I know you and the team there, Total Farm Marketing, fantastic folks. And if anyone needs advice, totalfarmmarketing.com, a great place to start. And with that, I will thank you for the time today. Thanks for joining us on Market Talk. We'll have to do this again soon.
I would love it. Thanks for having me.
Naomi Blohm with Total Farm Marketing, our guest today on Market Talk. That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.